Video, guys. So welcome again. Firstly, before I get started on this video, like this video, guys. Subscribe to the channel. Guys. I'm really appreciating most of the people commenting and whatnot. I'm loving the love, man. I'm here for this. Do you know what I'm saying? So let's get started. So this video today is all about the best scalping strategy for all you lot that like trading lower time frames. Okay. So before I get started, I just want to say, let's say we're in the mindset where if you need to watch some of my other videos, right? So I'm going to put the links below of the videos that you need to watch for this to make sense fully, okay? So you need to have done your research about the currency first, okay? The fundamental research about the currency and know the sentiment driver of that given currency, okay? So once we know the sentiment driver of the currency, so I know the sentiment driver of Euro USD today. Okay, Euro USD is projected as a trade that's going to perform and is going to go higher based on weak US data and the global recovery happening in Europe. So we're basing it on that purely. We're not picking any random currency pair and doing that. We're basing it on fundamental research on which currency is strong and weak. So we're putting a strong currency and a weak currency fundamentally. All right. So I'm on the 1 hour time frame, right? So I see, or I'm going to go, bit by bit and explain how I go about it. So I see a breakout around this level here. So we've got two areas of support. Okay. So we've got this area here of support. Okay. So we've got that area there of support, which is currently been broken. So the next area that should be tested is this area here that I can say, wow, this is the next strong area of support. First and foremost, right, one thing we need to know is we need to know the market state of this currency, okay? So the market state, which is the market condition, is it in a channel or is it in a trend or is it in a range? Currently at the moment, looking at this thing looks like it's in a, what do you call it? It's in a channel. What does it mean if it's in a channel? It means that the pullbacks are likely to be deep, meaning that we could potentially get pullbacks coming back to the S3 level or potentially the S4 level before resuming to go up, okay? So I'm using the 1 hour time frame, all right, to see the market condition and the market state. So I then take it down to the 15-minute time frame. So I'm going to use 3 time frames, okay? So I've taken it down to the 15-minute time frame. I can clearly see candle by candle, structure by structure of this area here. So by looking at the momentum, guys, you have to look at the momentum. The momentum of the sellers is pretty much strong, right? And bearing this in mind, we said we were in a channel. The market showed us that it's in a channel, which means the pullbacks are likely to be deeper and deeper and deeper. They're going to come deeper. So right around the S4 level, that's where we're looking to see the trade perform. So how do we then use a lower time frames? Okay, to use lower time frames, right? I use the 3-minute time frame. That is probably one of my favorite time frames. So if I click, okay, let me just move this here. Okay, so if I click auto here, okay, so for the lower time frames, basically, right, the way you should be using lower time frames is to enter and to gauge the momentum. Okay, to gauge the momentum of the pullback. All right, so if you take a look at this, right, we see here we've got a little mini support and resistance area here. That little area of support and resistance has been broken by aggressive sellers, and now it's pulling back up. And then look at the sellers in this area here; they're still pretty much very strong. So does that signify buy? No, it doesn't. That still signifies to us that, okay, we still have what do you call it? We still have let me get this off. We still have sellers very dominant in the market. Okay, so this is just shows aggression of the sellers here, especially this here. So we're likely to see price push lower. So we're using the lower time frames to gauge the momentum of the pullback. Okay, if you want to take the risk, you can take a short. You can sell it. You can say, right, I can see the sellers are pretty much weak here. Okay, no, I can see the sellers that are pretty much strong, and I can see buyers are not really coming in and pushing the market stronger. I can see that this area here of SNR is still holding on the 3-minute time frame. I can actually take this thing down for a sell. So you take that and you put a short here, short position, 12 pips, 11 above this area here to be much safer, above this area here and above this area here, most precise. And you could potentially try to take the trade where you think you could be going. Right now, as I trade, I don't look at pips. I look at risk to reward, the percentage. Okay, so if I risk 1, I make 1:3. I make 3% in this trade. This is how you should look at it. Don't look at pips. You could have 100 pips and have a risk to reward which is 1:1. That's shit. That's terrible, right? This is what you should be looking at. Is it 1:3? Is it 1:2? So if you risk 100, you make 300. So you take it down here, right? 1:5. So to that S3 level here, where I assume the buyers are going to come back and step back into the market. So this is how you could use lower time frames. This is exactly how you could use lower time frames. So I've done this little mini thing for Euro USD. I'm then going to screenshot it and put it on my Twitter. So if you want to see how the trade performed after, you can go to follow my Twitter and you see all that information. So this is exactly how I go about using my lower time frames specifically. Okay, so if I go back to the 15-minute time frame, so the thing is, we're trying to take this trade back to the S3 area here, to the S3 level here, so we can take our profits. That is technically 72 pips. Amazing if you're a pip reader. Or to the S2 level, which is much more safer, which is 1:3. So to get to S2 level, so you take 80% of your profits here, you move your stop loss to break even, and then you try to see if you can push back down here to the S4 level before resuming the actual uptrend. So you're basically trading the pullback, you're counter trending. But do I recommend counter trending? No. I'd rather wait for the trade to come back to the S3 level or the S4 level or the S2 level and then resume it for the buy. So this is how you could use lower time frames. It's a little quick video. I hope you guys enjoyed it. I'm going to be uploading more videos. Comment, like, subscribe, share, send it to your friends, your family, and everyone. Thank you.